Good afternoon, investor and corporate. Welcome to Set Digital Roadshow third quarter 20 and 21 performance review. This section will run about 45 minutes, including Q&A. Company will start the section by 30 minutes presentation, followed by 15 minutes Q&A. And during Q&A, investor may leave your questions in meeting room chat box or use raise your hand function. We will open your microphone so you can ask the question to the company directly. So may I now invite INDORAMA Venture Public Company Limited to start the presentation, please. Thank you very much.
Thank you, Stock Exchange of Thailand, for organizing this event for us. My name is Vikas Jalan, and I'm with the group since 2004 in INDORAMA Ventures. Joining me today, Mr. Bourbon, he's my colleague, he's Vice President Business Development, and my other colleagues. So I hope you all are safe and fine, and thanks for your time. So let's start the presentation. A quick disclaimer that this presentation might have some forward-looking statements, but they are based on our current estimates of the market information. So let's move on. A quick overview, like over the years, almost like 2 years, 2.5 years pre-COVID, the company is under transformation. And this transformation is multifaceted, like in the platform. So I'll tell you that we have created a global platform. We are in many countries, actually 33, 34 countries we are now. And we are very, very global in 4 continents, in 3 segments. So we have a global platform, and over the years, the management is working, the top management, INDORAMA Management Council, and also at the board level, that how to address the succession planning, because some of our leaders are aging, and so almost like 3 years, there's a big transformation going on. And recently, there's an announcement that we have some reshuffling, and the whole objective of this is to empower the people, to create more talent pool and give them more exposure within the company. So we have something what we call as INDORAMA Management Council, which is a bench of like 45 leaders, and they are empowered, giving different responsibilities and rotation. And systems is an area that we were lacking over the years, and we acquired a lot of companies, we integrated them, some low-hanging fruits like supply chain optimization a bit, sales, procurement, the big ticket items, but then the real integration in terms of like the stores and spares, indirect procurements, some of the small ticket items was not there, because we did not have one common system, and it was more dependent on manual calculations and sort of manual driven, not automated. And this is where a lot of opportunities we see, and we are in the implementing today the largest ERP solution in the chemical space, ERP S4HANA, and release 1, the first phase is already rolled out. It's about 2 weeks now, and another 2 phases will be rolled out in next 2 years. So this system will empower people more and take more informed decisions, and will also help us to do a benchmarking and also bring a lot of cost savings and also efficiency gains. There's a whole organization around this. We call it Project Olympus. So I just mentioned you one project, which is S4HANA ERP solution, but then we have global business solution like our back office operations now running out of India. So we have a lot of repetitive jobs, and so that's been now outsourced. And then, so Project Olympus, as you can see, is realized efficiency gains of $201 million in 9 months 21. So it has almost like 2,400 projects, and it is, my colleague will talk about it. Oxiteno is an acquisition that we have announced in our IOD segment space, and this acquisition is going to complete in first quarter 2022, and we are very excited about this acquisition, the green chemistry and biodegradability surfactants. It's a very, very good portfolio of products that we're acquiring. Deja is a platform that we launched this year. Sustainability is key to us, And the carbon neutrality, we are the first company to launch the zero carbon PET, virgin PET in the world. And we gain a lot of traction from the customers like Cokes and Pepsis of the world. We are the largest supplier to all of them. We are 22% of the global market, so we feel responsibility to also bring out more innovative products to provide more sustainable solutions to our customers. 15 business units under 3 segments, and they are supported by 6 corporate enabling functions. And these are the functions that cut across the organization. So we have like a matrix approach where we have 3 segments and different businesses, but then the enabling functions like communications or EHS or even the business continuity, digital, Six Sigma, so all that cut across the organization. And there's an organization. So there's a development of enabling function in the last 1 year. GBS, I mentioned to you. So North America back office operations are now handled from India. We see some efficiency improvements. The cost improvement is small at this time, but we expect it to reap more benefits as we go forward. This Project Olympus program runs up to 2023 and beyond, but our targets today is up to 2023, and we'll talk more about that. So let's move on. This is just to show you a little more transformation, and I call it a deep moat that we have created in the company with huge tailwinds that we have created over the years. And then this is how basically the company now differentiates in the space in a very different way. Like even if you look at PET business, we have a very sustainable solution, like whether it's a Deja platform that we launch with zero carbon PET or recycling. We are getting more and more capacity, and we are offering more solutions. So we have created that mode. And if you see our portfolio in 2011, which was just around the IPO time in 2010, our combined PET concentration was about 88%. Today, we are highly diversified. So now combined PET is about 65%. IOD is a new segment which came in 2012 and further expanded in 2020 in a big way. So that's about 20%, and fiber is about 15%. If you see our geographical diversification, then also you can see we are pretty diversified. On the right hand side is a major change and major sort of a change in the earning profile of the company. So over the years, if you see our EBITDA, quarterly EBITDA used to be in the range of like 200 to 300 million dollars, in that range in 2016. And now for the last 3 quarters consecutively, we are delivering over around 400 million dollars. We still have some headwinds in the business, and we see that easing. Like it's getting more and more easy as the outlook, business outlook. We'll talk about that. So we lost a lot of volumes this year. So we expect that our sustainable average quarterly EBITDA is about over 400 million dollars this year, and it's going to get better, even improve next year with the volumes and the margin outlook that we have. And the cost is also easing, because this year, you know, the energy is very expensive. So we had some high energy costs, especially in Europe, and which is sort of we were able to pass on some to our customers, but we did have some high cost, and which is we expect to ease out next year. So let's move on. Today, our portfolio, our business is combined PET is about 50%. I said 65%, but that's on the EBITDA. But like on the contribution margin level, it's about like 50% on an average. IOD segment is about 30%, and fibers is another 20%. So that's a rough division of the business. And in all the 3 segments, as I mentioned, that we created a deep moat. over the years, and this is the work the management has done over the years by building this business. And PET, if you start being the largest segment, we are the preferred sustainable material with a lower cost, lower GHG emission, and 100% recyclable. We're the largest global producer, and we have the top quartile cost position. In the IOD segment, we have the full integration all the way from we take the ethane input and we make intermediates and downstreams, and my colleague will talk more about that. In the fiber space, we have three distinct vertical lifestyle fibers, so which is essentially the polyester fibers, and we have good capacity in Indonesia. We are expanding. We are already in India. We are expanding this capacity in India. And the customers are more like the Zara, Uniqlo, all the brands, the main streets. Hygiene fiber, we are the largest polypropylene fiber supplier to the premium diaper segment, and the mobility is our airbag yarns and car tire cords. And this is a very niche area, and the customer approval times could be like 3 to 5 years, so it's a very sticky customer. And today the mobility faces headwinds because of the shortage of semiconductor chips, which might continue to be there next year. But this hygiene and lifestyle are expected to improve as we see going forward. Let's move on. So let's talk a little bit about the PET segment. So as I mentioned that it has the lowest carbon footprint, and it's a very important slide to talk about, because as I mentioned that everything we do, we have sustainability angle around it. And if you see the entire packaging space, so for the beverages, there are three major packaging available options is PET, aluminum, and glass. And the glass has seen a zero growth over the years. In the last 10 years, you can see the glass has not grown. And for the reason you can see it has the highest GHG emissions, and also the price is high. And aluminum continues to grow at about 2%, and PET is growing about 4%. And aluminum has like 50% higher emission compared to PET. So it is established product in the space that for the beverage packaging, can we go back? So for the beverage packaging, PET is the preferred polymer out there, and it's preferred over aluminum, but aluminum has some consumer preferences. But if you see the GHG emissions or the price performance, the PET is a better product, and it is that's why the growth is higher than aluminum cans. And so our customers, whether it's a Coke or Pepsi or the major brand names, whether it's a Nestle or Danone, everybody is sort of looking more PET solutions for their packaging needs. And within the polymer space, the entire plastic space, PET is a very small portion. So you can see there are 6 types of plastics out there, and not every plastic you can use for beverage packaging. It's only PET that's mainly used for beverage packaging. But then PET gets clubbed in the club of like plastics. But you can see here that it is the most superior plastic because it's fully circular. And the SDP, yes, there's a recycling, it happens, but then in many cases it gets downcycled. And downcycle means like you recycle and you don't take it back to the original form. So you don't make the same product, you make more inferior products. But in PET, you have that option that you can take it back to PET bottle. And that's why it's gaining more market share, because the regulation are getting more and more tougher for other plastics. For example, like if you look at Europe, there's a tax which is coming to use certain plastics which you cannot recycle, or which is not recyclable. So the products like polystyrene, we don't make that, but the products like polystyrene, they are facing a lot of taxes, and this is where we see a lot of switch coming from polystyrene to PET. And you might know Philadelphia, the brand, they are moving from polystyrene to PET. So this is what we are seeing more and more. So PET is gaining more market share in that sense of the entire plastic space because it's fully circular and it has the lowest emission. And within the beverages, it has a better trait over aluminum and glass. Let's move on. So not only IVL, but the entire industry is also working towards more solution. So if you see IVL, so we partner with Ionica, which is our partner in the chemical recycling space. So we are exploring the technology with them in Europe, and we partner with them, and took the marine waste, and we converted that into bottles, PET resins for the Coca-Cola bottles. Similar way, Danone for the Evian, they have launched through some innovation on 100% recycled PET. And also, if you look at Suntory, the Japanese, they have also come up with different solutions. So PET as a product is fully circular, and within the PET space, now more and more waste management and waste collection. So there are two issues. One is the GHG emissions, and the second is the waste management. So PET faces some challenges on the waste management because today the collection is about 55%, and this is where a lot of industry regulators, they are working to improve the collection, and this is where we see a business opportunity for IVL, and also to make it a fully circular product in the real sense. So with that, I request my colleague Borbun to take a few some more messages here. Thanks.
Yeah, so Vikash mentioned to you earlier that combined PET is currently 50% of our portfolio. What I want to talk to you about on this slide is how we've been on a journey to create another high growth pillar for IVL in IOD, leveraging on the lessons we've learned throughout the years in establishing our CPET business. So with the passionate and capable team, the IOD business has evolved from a single EO/EG site in 2012 to what we'll have now in 2022 with the addition of Oxiteno, an integrated, differentiated regional leader with global ambitions. The Oxiteno acquisition is a timely one, and we expect to significantly benefit from the combination, extending our downstream surfactants portfolio in terms of end markets, technology, raw material integration, and here it's also going into sustainable raw materials, geographical diversification, and very importantly for this segment, innovation. We are now focused on the value creation 100-day plan, which will help us reap the benefits from day one. The segment will continue to focus on operational excellence while developing its R&D capabilities and pursuing adjacency growth opportunities. Next slide, please. So sustainability has become central to our decision-making across our three businesses. As we think about steering the company over the next decade and beyond, IVL has set a target of 10% GHG intensity reduction by 2025, and we have the ambition to be a carbon neutral company. We aim to achieve this through a five-pronged approach, including operational eco-efficiency, renewable energy, recycling, future technologies, and natural capital solutions. We've committed to investing at a minimum $1.5 billion towards these initiatives by 2025. To demonstrate our commitment towards meeting and hopefully exceeding our targets, this quarter, we launched our decarbonization standard operating procedure, which is a comprehensive financial policy, including an internal carbon price mechanism and governance structure to accelerate deployment of projects with environmental attributes. As we progress, we continue to assess appropriate medium and long-term decarbonization projects. IVL benchmarks itself against international leaders adopting best-in-class practices. To this end, IVL joined the task force on climate-related financial disclosures. We have implemented the core elements of recommended disclosures in the areas of governance, strategy, risk management, and metrics and targets in an effort to enhance our consistency, robustness, and comparability for our stakeholders. We're excited to be developing some innovative products under our Deja umbrella. So one is anchor tire cord made from bio-based raw materials, and 2 is cyclo, an additive added to polyester fibers to enable biodegradability. Over the next quarters, you'll see more and more initiatives under our Deja platform and sustainability as a whole. We're also proud to announce that we've received the Best Sustainability Award in 2021 by the SET, which is a testament to our continued progress on this front. Next slide, please. So here, let me talk to you a little bit more about our Project Olympus. Our 15 business verticals under our 3 business segments are demonstrating commitment and determination in their contribution to Project Olympus, achieving $63 million in efficiency gains this quarter and $201 million in the 9 months of this year. Project Olympus will recalibrate our cost structure, and we look forward to the total of $600 million efficiency unlocked by 2023. The program touches all segments across regions. It delivers across business levels like strategic footprint, operational excellence, commercial excellence, procurement, and organized for performance. Along our transformative projects execution, Project Olympus has institutionalized and harmonized our approach towards identifying, screening, resourcing, and subsequently tracking the milestones for each large or small initiatives at each site across the globe. In addition to fibers, which has been contributing the maximum to this program so far, our IOD business has implemented several projects during the quarter. Next slide, please. Vikash, I request that you run through this slide for us.
Thank you, Bourbon. So every year we organize our annual event, Capital Markets Day, in January or February, in the beginning of the year. And so this year we had we did not announce, but we had an internal budget to get an EBITDA of $1.5 to $1.6 billion. And we are happy to report to you that this year we are ahead of our budget by about 25%, thanks to inventory gains, because we look inventory gains more as an exceptional item. But yes, I mean, these are reported numbers. So there were some higher inventory gains, but also the business improved. And we saw better margins. And we saw better margins in all the businesses. I would say in the combined PET, we saw better margins, and that came from better demand of the products. So the volumes also went up, and also sort of the capex got delayed in various businesses, like across the sector, across the industries, different verticals, in general due to COVID. And demand improved because with the vaccines rollout, and also like PET, you know that this is a product when the people are out, they consume more. So the real potential demand, we will see growth next year because the vaccines rollout is more and more in different countries. But still this year we saw better demand. So all of that helped to improve margins. And then in our IOD space, as I mentioned to you earlier, that we have the full integration from shale gas to MEG and the downstream. And we had a better gas advantage over the naphtha producers in Asia because the oil price went up and the gas went up, but not in line with the oil price. So there was a better shale advantage, and we benefited from that as well. And our very strong portfolio in the IOD downstream, which is our surfactants space, and my colleague was talking about it. And we are quite big in that space with the Huntsman acquisition, and now Oxiteno is going to further expand that portfolio. So we see that demand improve because some of the application goes into oil and gas mining. So in general, the economic activity improved, but most of the application is into like home and personal care. So that was pretty healthy even before, but other businesses also improve. The headwinds we had this year, the MTBE, which is a product in our intermediates. So that was down because of very high butane prices. Is a feedstock to make MTBE. So that was a headwind for us. In the hygiene fiber business, there was a lag loss. So we lost almost like $38 million this year because we could not pass on the very strong feedstock cost. There's a lag of about 3 months, even though it's a cost plus business, but still we have that lag. So all of this is reversing next year. And energy prices were very high, like especially in Europe and other parts of the world. So we lost almost like $120 million higher energy prices that we had to pay. Some of that we recover from the customer as a surcharge, as you will see in the fourth quarter that we have recovered some surcharge from the customers. So all of this sort of the headwinds and the improvements. But overall, the main message is that the business improved beyond what we thought. And the outlook, as we see for the fourth quarter, is very strong. And as we see next year, as we go into next year, we see a golden year for IVL, and it's going to set a new benchmark. We have a lot of contracts in the Western markets that we have already done at a much higher levels that we normally do, and this year what we have done. So next year we have some firm contracts, and the outlook is very strong. Except that one segment, as I mentioned to you, in the mobility space, with the automotive space, the semiconductor chip shortage is keeping the new car production in check. And that's why our airbag yarns, like 25% of the global airbags, they're using our yarns. So you can imagine that there's a direct impact on the new car sales, but that's about 3% of our portfolio. So almost like 90+% of our portfolio, we have a very good visibility. Yeah, over to you, Bourbon, on the next slide.
Yeah, so I would like to touch on the recent development in China in terms of the dual control policy and what it means for our business. You know, with the production booming and carbon neutrality becoming an urgent priority for governments and corporates across all sectors, in September, China introduced the dual control policy, which seeks to curb energy consumption and intensity of emissions in an effort to meet its climate targets. The subsequent, power rationing and production cuts have created widespread disruption across energy-intensive industries. As an example, bringing in aluminum prices to that 15-year high, as well as spike in coal prices. So with China curtailing coal-based production in order to conserve resources for the coming winter, MEG margins have strongly recovered as the sizable coal-based MEG production in China has reduced. We're seeing similar supply tightness across the polyester value chain. And China policy, coupled with strong demand-supply fundamentals, have translated into enhanced PET spreads in Asia, which is a strong positive for IVL. This is contrary to the typical seasonal weakness that we normally see in quarter four. And this is driven by 5 key value drivers. One is the pent-up Chinese consumer-driven demand supported by sharp rebound in beverage sales, the tightness in export markets due to post-COVID demand recovery and capacity outages, the short Chinese PET resin supply due to the dual control energy restriction policy, 4, the sustained high ocean freight rates and inland logistical issues, and 5, the high prices for aluminum and polyolefins act as additional demand drivers for PET. We expect our vertical integrated PET and lifestyle fibers, as well as our intermediates in IOD, to benefit in the coming quarters. Next slide, please. So let me wrap up with our outlook for 2022. We're very optimistic for the future, and looking at the end of the year and into 2022, we expect demand for IVL products to remain robust across the portfolio, bolstered by the continued economic recovery. So in CPET, We expect the supply chain will remain disturbed, keeping the freight rates high. We expect to see robust demand across the portfolio. The low pipeline inventory and continued strong margins in the West economies are encouraging signs for the combined pet business. The next quarter will begin to reflect these tailwinds, and while favorable new contracts support strong 2022. The headwinds coming are from the high energy prices globally, partially being mitigated by the surcharges that we're imposing in Q4. Circularity and low carbon footprint for PET is also well appreciated by our customers, with rPET continuing to grow strongly. In IOD, we're hot commissioning the Lake Charles cracker in Q3, and our IOD segment will begin to reap the full benefits of the cracker in Q4 and into 2022, as well as continued advantage of the shale gas economics. We expect that MTBE margins may see partial recovery with stronger Latin America demand. However, butane prices are expected to remain high over the winter months. MEG margins expect to improve due to the tightness coming from the China dual control policy. IOD downstream volume and margins we expect to continue to be healthy, and then we'll get a further boost with the addition of Oxiteno. It's a highly complementary fit to our existing downstream portfolio. And after the completion of the acquisition, will be a formidable surfactants player in the Americas, providing unique and innovative solutions for our customers. In the fiber business, the ongoing semiconductor shortages will affect our mobility fibers, and this is likely to persist, impacting our airbag yarn business. The lifestyle fiber, we expect to see further volume and margin improvement as Asia emerges from the COVID lockdown and domestic demand improves. China's policy will add to the tightness, further benefiting the polyester fiber segment. The hygiene fibers will benefit from a reversal of the negative raw material lag that we saw this year. The hygiene vertical continues to invest in establishing local footprint in higher growth markets, including capacity expansion at Fiber Vision in the US coming online at the end of this year, and the relocation of an existing production line to India, estimated to start during first quarter 2022, and a brownfield expansion that we'll be doing in Russia by mid-2023. Overall, I think we look forward to a highly positive quarter 4 2021 and 2022 for the entire IVL portfolio. We continue our journey to build an organization that is future ready and future proof, and we have conviction in the journey that IVL is on, providing a world-class sustainable solution for society, and we have the best people in the industry to lead us into the next era.
The section has come to an end. So on behalf of the Stock Exchange of Thailand, I would like to thank you investor and corporate for joining the conference. We look forward to welcome you all again in the next quarter. Thank you very much and have a good day ค่ะ